Hello again, traders, and welcome out. This is Ankit from Maverick Currencies here, and this is our market recap for Monday, October the 24th. Let's get into it and talk about today's market price action. So let's break down today's market analysis. So we are seeing markets definitely improving a little bit. Equity markets have gained another back-to-back gains, and as we discussed in our currency room over the weekend, we're expecting actually markets to have a bit of a positive price action into this week. Again, volatility remains high, and that's one of the things that we discussed in our currency room. And we continue to watch that kind of price action. Overall, a good day in the markets. The VT was actually a little bit weaker. I mean, the technicals are following the similar pattern, which is above the 20-day moving average, and then trying to rise above next to the 50-day moving average. So overall, things seems to be okay. And as far as the crypto market goes, we are not really seeing any sort of breakout whatsoever. So far, let's just shelve the cryptocurrency and talk about where the actual movement is happening. So outside of the equities in the crypto world, the gold actually had a bit of a down day so far, and the oil was actually down as well. So the equity markets are now back to the highs that we saw back in October, early October. So a little positive sign. And at this point, if it does break out above this level, we can see a further continuation. The other thing that we're noticing in the currency market is the intervention by Bank of Japan. We saw the intervention that took place on Friday after the London close. And if you look at the price action last night in the Asian markets, we saw another attempt by the Bank of Japan. So it's interesting that they are not really publicly announcing that they're intervening in the markets. But again, the price action, where we get another very sudden 300 pip move, I mean, that's indication that they're intervening in the markets. So outside of that, not a whole lot to discuss in today's market price action. It was pretty simple, straightforward. I think this week is very interesting as we continue to sort of carve out a little bottom here. So that's one of the things we're paying attention to. This is a very busy week when it comes to the schedule. So we are going to be very active around the news events, especially as we have all these news to digest. So we have the PMI figures out of the Eurozone, and you can see they were actually not that impressive. But outside of that, we are looking into tomorrow, Aussie CPI, that's tomorrow night. Going to Wednesday, we had the Bank of Canada. So there's a lot to kind of process this week. And I think there'll be good opportunities around that as well. So as we take a look at our market outlook, again, we are now at -1. We used to be sitting at -3. And again, as the technicals are improving a little bit, we are above the 20 moving average, below the 50, and then the slope is kind of gone there as well. So I think at this point, mildly bearish in the markets. I think as much as we are seeing the markets moving in this downtrend, I think in the shorter term, we're expecting a little bit more of the uptrend coming forward. So let's do a quick currency analysis and see what exactly is moving the currency world and see where we need to focus on and kind of focus on the currencies that we really like going into this week. So let's quickly glance at cryptocurrency. Again, not an encouraging week, especially, you get days like where everything should have gone up. We are not really seeing that kind of translate into the crypto world. So there's not just a lag, but there's just that lack of enthusiasm. We looked at the volatility in the crypto markets. They're actually sitting at the lows over here that you've seen in the previous months. So the volatility is not there. The consistency is not there. So that's one of the things that we don't want to be trading is when we get this mismatch. Now, in the currency world, again, we are noticing good strength coming in euro. I talked about euro. That's one of the best currency I like here as far as the technical goes. And remember, on Thursday, they're coming out with their ECB rate statement. They're expected to raise rates by 75 basis points. So overall, remember, we talked about buy the rumor, sell the news. Again, we're seeing a nice buildup happening in the euro across the board. Outside of that, these two didn't really make sense. If you really start to put one on one together and say, well, correlation wise, markets are up, and so growth currency should be up. I mean, that was really not the case. Aussie and Kiwi, they both were down. But outside of that, again, why they're down? Because the dollar was up. So interestingly enough, at this point, dollar and euro are up at the same time. And I know this is not the negative correlation that we kind of have seen previously, but this is where things are actually improving as far as this price action goes, especially in the euro. I mean, take a look at the divergence between euro and Swiss franc. Remember, Swiss franc used to be the strongest, euro used to be always weak, and there was that negative, negative sort of divergence taking place. Now we're seeing the opposite. So euro Swiss franc remains a currency pair that I'm looking forward to. But then look at the Japanese yen. They're still sitting at a minus 0.34. So despite all these attempts, they're not really working. Again, all that short-term moves that we get in this Japanese yen, they all end up getting erased. So I'm pretty sure this is not something that the Bank of Japan wants to see. They're failed attempts. But again, this week we have Bank of Japan press conference, so maybe something we can see in their policy statement if they're looking to make a change. But that's a long shot there. But outside of that, Canadian dollar was not really participating. So clearly, the money didn't go into these growth currencies. The money actually went into these European currencies, and the dollar and the yen divergence over there. So we'll break it down more into when we take a look at the charts. But as far as the velocity goes, again, the velocity in euro looks the best. Outside of that, again, dollar used to be sitting at +3 and +2. Now dollar is not really sitting at that strong level. I think dollar could be in the middle of sort of a correction. But again, dollar has been one of the best performing currency for the last month and a half. So it seems like that's kind of changing a little bit in the short term. Now, Swiss franc, I've talked about Swiss franc last week. I like it more on the short side, but for now, we got a +1 on this one. But I'm not really expecting this to go further up. I think the Swiss franc can easily move downwards again. The British pound staying at a +1. It's not really moving. Again, yesterday, we got the news that the UK agrees to have a new prime minister. And again, that's not really a big market moving event. I think a lot of that's really priced into the British pound right now. But outside of that, I think euro on the counterpart seems to be one that's really moving. On the weaker side, Aussie, Kiwi, and the yen. The yen is really a tough one right now because, again, when you get these interventions, again, these creates big movements. Those are sometimes difficult to trade. So it's always important to keep a close eye on this market moving events. So let's talk about possible trades ahead and talk about our strategy going forward. So as we take a look at the charts, I mean, let's just start with the dollar yen. And this is where if you go into the shorter term time frame, you'll start to see these intervention attempts. Something that we saw last night. I mean, you can see this big move. Dollar yen, we went from 149 down to 145.60. So again, that's a 400 pip move. If you go back to last Friday, that went from about 152 down to 146. That's a 600 pip move. I mean, these are gigantic moves. So even though you're trying to put stops in there, it's just going to make it a bit of a challenging task. But you can see that after that was quickly erased, and overnight everything stays strong. And I think this morning, this seems to be another intervention attempt that went from 149 down to 148. So every time you see these quick moves, these are coming off as intervention attempts. But notice that each time these movements come, they don't really have that long-lasting effect. And I think that's where a lot of traders are doubting. But again, when we are getting continued interventions, this is where you just really have to be careful of the price action. I mean, unlike the last time, September 22nd, when we got the last intervention, notice that after that, it was pretty much smooth sailing when it came to recovery. This time around, getting a lot more volatility. So if you're trading yen crosses, be careful. And that also has a big impact on the dollar as well, because every time we see the dollar yen really reverses, I mean that really has that similar impact with this dollar crosses as well. So I think that kind of makes it a little kind of difficult condition for both the dollar and the yen. But overall, I think fading those moves seems to be the right play here, and I think that's something that we can kind of pay attention to. But overall, I think I'll be waiting till Thursday when we get the Bank of Japan rate statement. And again, after that, I think it will be a better trading environment for the Japanese yen. But I think until then, watch out for these interventions. Now, let's talk about some technical levels. Well, one of the first pair that I really like, I want to talk about is Euro Swiss franc. I mean, talk about a trade that's actually lower fallen volatility and just continue to move. And this is, again, divergence. That's what we're looking for. I mean, you can see that we are now tracking this moving average very nicely. We pull back, rise again. And the one thing I like about this price action is that as soon as we get that breakout, we just hover around that area. Today, we actually hit that 98, 91, 92. I mean, it's only down 4 pips from that level. And that's what you get with the fall of volatility. You're not really getting those back and forth moves, and they're getting consistency here. So we're clearly above the 20 to 50. I think at this point, especially as we go into Thursday for the ECB rate statement, I think this can easily attempt for that parity level. Similar case goes with the Euro USD, and we'll take a look at the dollar basket. But something I talked about in the currency room, I really like this setup as well. I think as we get above or break this 20-day moving average, again, the goal right now is that they can all attempt to get towards that parity level. So that's both the euro dollar versus franc, kind of aiming in that direction. I think this one just waiting for a little bit to clear out that level. Now let's talk about dollar basket, because I think a dollar is where I think the next big opportunity can be. And so if you look at the daily chart, I mean, this is not as clear because we did break below the 20-day moving average on Friday. We did bounce back a little bit, but let's go on a 4-hour chart. On a 4-hour chart, this looks more like a bear rally to me. You know, if you just make a lower low with a lower high, I think the next 24 hours we can see a little bit more weakness in the dollar, especially now with the positive day in the markets. I think we can see a bit more of a risk on a rally, which again would be bearish the dollar and bullish some other currencies. Now, that's what we have for the dollar. I think this is, again, maybe the early stage of what the dollar is going to do, but I think I do like this setup here, especially if it breaks further. And this low over here, if it breaks below that, that makes a better opportunity. So what we want to pair dollar with, that's a big question. I think euro dollar we just looked at. Let's take a look at the setup here, 4-hour chart. We got a nice little resistance here. So I think what I was looking for is a further breakout of that resistance. 99, I think, will be next level where we can break above and then kind of aim towards that parity level. So outside of the euro dollar, let's take a look at how pound dollar is doing. And pound dollar is more consolidating here. So I'm not really a big fan of pound dollar compared to the euro dollar. I've talked about other currency pairs, but they're just very choppy right now. Look at dollar CAD 4-hour chart. It looks very similar to what we look in the dollar basket. It break lower, rally a little bit. We're below the moving averages. I don't mind taking a look at short on this one with a possible target at 136.50 with our stop right above here. If we go into the other currencies like Aussie dollar or Kiwi dollar, I mean, this is where we're seeing most volatility. You can see that the Aussie dollar was just nice little rally here, pull back. Again, this pullback could be just a buying opportunity. But again, technicals are not that greatest, so which is where you can kind of use the benefit of the doubt here that maybe this is not a clear or a strong price action. But if the price action holds over here against 62.70 would be stop here. Again, this makes a nice risk to reward if you can rise back up to that level. Now, Kiwi dollar, again, I think we're probably with a similar setup here. I like the Kiwi dollar in the sense that a Kiwi is actually trending up a little bit. And I've talked about Kiwi being a better currency over the Aussie. And I think that's where I do like some setups here on the Kiwi. Even take a look at Kiwi versus franc. Same thing. I do like it set up here where it did pull back. And just using these pullbacks as buying opportunities. But lastly, if you're trying to go for yen long here, which is a very difficult trade, I mean, I can look at all the yen crosses and I can't really pinpoint a good technical setup here. I mean, at this point, it's more like a coin flip. Is a very wide range, very difficult trade to really capture on, especially, even though you get the intervention, like it's hard to get the initial move, but it's hard to get these rallies as well, because then you don't know if there will be continued event on that. So look at the volatility is very high, difficult conditions for the yen. So hopefully we can get a little bit more better price action of the yen, especially with this Bank of Japan press conference coming this week. So pretty clear on what we are looking into as far as the setup goes. We like the euro. That's what we'll be focusing on. If you take a look at the euro basket itself, euro is doing much better. I mean, daily chart, it's trying to break above. I mean, we are back into the July highs. I think at this point, the price action could easily continue moving forward onto the upside. It's above the 20 to 50 to moving average, so the price momentum is setting up nicely. So again, it's all depending on what do you pair with. Some trades will be slow, but there's a consistency to it, like Euro Swiss franc. Some other trades might have more volatility, but something that you kind of have to deal with that volatility in order to catch the big move. And like I said, the euro dollar seems to be like on the verge of breaking out. So those are the setups here. But as we look at the schedule, there's a whole lot we have to process this week. So make sure you're not overdoing on your trades and for waiting for those high probability events to make a trade. So in conclusion, equity markets again likely to strengthen here. I think we could see a further continuation to the upside. Looking to trade around these events, very important. Keep an eye on the schedule. I think that's where most of the moves will come, along with what we are seeing in the markets. Have a proper position sizing, especially when volatility is high. Ranges are wider. It's definitely difficult to ride that volatility and get stopped out much more often. So in order to really, not avoid getting stopped out too often, you really have to adjust that stop. So make sure you're doing your position sizing properly so you give yourself enough wiggle room. Lots of content coming out on the schedule this week. Again, we'll be very active, especially with these rate statements. We'll be covering those a day ahead. So tune out for that. And if you have any questions, always reach out. Other than that, take care. Happy trading.